The United States is maintaining a 10% tariff on all Chinese imports, a policy that continues to weigh on global supply chains. In addition, there's an extra 20% tariff specifically targeting fentanyl-related goods, as the U.S. government tries to crack down on the flow of these substances. These tariffs are not just numbers, they affect the prices of everyday goods, from electronics to clothing, and ripple through the global economy. Former President Trump has made headlines by promising to raise tariffs even higher if he returns to office, potentially up to a 55% effective rate on Chinese imports. This tough stance is meant to pressure China, but it also raises concerns about higher costs for American businesses and consumers. Meanwhile, China is signaling that it won't back down easily, setting the stage for a prolonged standoff that could disrupt global trade flows. In response, Beijing is now limiting rare earth exports to the U.S., issuing export permits for only 6 months at a time. Rare earth minerals are crucial for manufacturing everything from smartphones to electric vehicles, and China controls the vast majority of global supply. This move gives Beijing significant leverage in trade negotiations and could create supply chain headaches for U.S. tech and auto industries. By reviewing and potentially restricting these exports every 6 months, China can quickly tighten or loosen supply depending on how talks progress. This uncertainty is making companies rethink their sourcing strategies and look for alternative suppliers, but shifting away from China is no easy task. Despite the tensions, both sides have agreed in principle to restart some sensitive trade, particularly in areas like technology and agriculture. However, any final deal still needs the personal approval of both President Trump and President Xi Jinping, and negotiations remain delicate. Investors are watching closely for any signs of progress or setbacks. Shifting to the U.S. economy, inflation ticked up to 2.4% in May, its first increase in 4 months. While this is still the lowest inflation rate since 2021, it's a reminder that price pressures haven't fully disappeared. Rising costs for groceries, housing, and services are keeping the Federal Reserve on alert, and markets are speculating about when interest rates might finally come down. Meanwhile, a U.S. appeals court has ruled that Trump-era tariffs on imports from China, Mexico, and Canada will remain in place until at least July. This decision affects a wide range of products, from steel to electronics, and adds another layer of uncertainty for businesses that rely on cross-border trade. Looking abroad, the United Kingdom is planning a massive £2 trillion in government spending, aimed at boosting infrastructure and public services. As a result, government bond yields are rising, signaling investor concerns about higher debt levels and potential inflation. The British pound has also seen increased volatility as markets digest these ambitious